The U.S. Department of the Treasury claims that the economy is surpassing expectations, citing increased economic output, heightened market flexibility, and slowing inflation as key factors. However, despite these claims, the current financial state of an average American contradicts the government's assertions of economic resilience. Before delving into further details, don't forget to subscribe and give us a thumbs up below this video. The future of the U.S. economy appears bleaker than what the government portrays. Bank closures are on the rise, and as we enter 2024, retailers are forced to shut down numerous branches. Once bustling main streets of the U.S. now resemble deserted ghost towns, America faces the looming threat of another financial crisis. Many banks and retailers are shutting down their businesses to cut costs and address the issues arising from the impending economic crisis. In the last 2 decades, the number of physical banks in the U.S. has nearly halved, with no sign of this trend slowing down. Data from S&P Global Market Intelligence reveals that nearly 5,000 bank branches in America were permanently closed between 2022 and 2023 alone. In 2023, just 2 banking giants, PNC Financial Services Group and U.S. Bank, closed 1 out of every 10 branches. This marks a significant decline in the number of banks on main streets in the U.S. for the 14th consecutive year. The increase in branch closures is partly attributed to the banking sector prioritizing online services over traditional locations, disproportionately affecting low-income neighborhoods and rural areas. This shift has led to the emergence of banking deserts, where access to essential banking services becomes increasingly challenging. While many individuals in these communities struggle to access financial resources and support, many financial institutions are embracing digital platforms to survive. However, this transition comes with a cost that impacts both customers and employees. As street banks diminish, so do job opportunities, worsening economic hardships for communities nationwide. According to recent reports from the Financial Times, last year witnessed 60,000 job cuts in U.S. banks, marking one of the most severe periods of layoffs since the 2007 financial crisis. This increase in job losses significantly contributed to the employment crisis in the U.S., totaling 3.1 million job losses across all sectors from November 2012 to 2023. Unfortunately, the situation seems to be deteriorating for both America and its citizens, with this figure poised to rise further. The issues extend beyond job losses. U.S. banks are also experiencing a troubling decline in customer credit and leasing transactions. Data from the St. Louis Federal Reserve Bank indicates that the annualized growth rate of loans and leases from commercial banks sharply dropped from 3.1% observed in November of the previous year to just 0.3%, significantly below the 3.1% annual inflation rate. Loans are crucial for supporting economic growth, and consumers avoiding borrowing from banks often signal a slowdown in economic activity and herald turbulent times ahead. Economic uncertainties, regulatory pressures, and repercussions of significant global events are among various factors challenging the viability of many banking institutions. The closure of banks not only impacts local communities, but also raises concerns about the overall stability of the U.S. financial system. Unfortunately, the narrative of layoffs, closures, and uncertainties reflects the challenges in the retail sector as well. In 2023, numerous retailers closed their stores and filed for bankruptcy, partly influenced by fears of an impending recession. Even renowned American brands like Nike are feeling the pressure of the economy's fragility. Nike plans to drastically reduce costs by $2 billion to weather these unstable times, underscoring the seriousness of the current economic climate. The retail sector is witnessing a noticeable trend of an increasing number of companies succumbing to growing financial challenges, leading to bankruptcies and closures. For instance, Bed Bath & Beyond filed for bankruptcy early in 2023, closing all 896 stores. Similarly, Foot Locker announced plans to close nearly 420 flagship stores by 2026. Even pharmacy chains like Rite Aid, once boasting over 2,000 stores in the U.S., succumbed to bankruptcy, signaling mass closures. American institutions like Target, Gap, Walmart, and Macy's also announced closures, emphasizing the widespread nature of the economic turmoil. This relentless wave of challenges appears stubborn, with little indication of easing anytime soon. While some attribute the decline in traditional street shopping experiences to the rise of online shopping, this narrative overlooks a parallel story unfolding in the digital retail space. During the COVID-19 pandemic, there was a surge in the popularity of online retailers due to consumers heavily relying on remote shopping. However, this surge has waned, and now many online retailers are grappling with their own challenges. Last year, Washington-based online retailer Zool laid off over 800 employees and announced layoffs on December 9th, just 7 months after a change in ownership. This decision came amid a challenging environment of increasing costs, supply chain disruptions, and shifts in consumer spending habits. Running a retail business today is extremely difficult, with companies facing relentless financial pressure and little room for error. The past months have underscored a harsh reality. Rising costs and declining consumer spending are causing significant financial strains for both online and offline retailers. Operating on narrow margins, these businesses now navigate in an increasingly unpredictable and challenging environment. Why are retailers and banks struggling more than ever? The answer lies in the changing financial landscape for the average American. While disposable income levels remain stagnant, the cost of living continues to rise. Housing costs have escalated, making home ownership difficult for many, and rental prices have reached unprecedented levels. Basic expenses like healthcare, education, and food have spiraled out of control, squeezing household budgets even further. The increasing costs of energy, transportation, and other daily necessities further exacerbate financial hardships for citizens. The widening gap between income levels and the cost of living has become an urgent concern. In June 2022, the monthly inflation rate peaked at 9.1%, contributing to the highest annual inflation rate in decades at 8%. By September 2022, 34% of American consumers reported struggling to meet financial obligations. The combination of high inflation rates and widespread financial difficulties highlights the deep impact of economic fluctuations on Americans' daily lives. It appears that America has entered a dangerous economic cycle where the cost of living continues to rise, while wages are increasingly lagging behind inflation. With limited disposable income, consumers tighten their wallets, avoid spending, and shy away from bank loans they fear they cannot repay. Consequently, both retailers and street banks believe that surviving amidst this disruptive change in consumer behavior is becoming increasingly challenging. Many believe that the government's insistence on portraying the economy as thriving stems from a desire to secure votes. A strong economy is synonymous with a successful government, which translates to popularity among voters. The political narrative of financial well-being becomes a powerful tool to garner support among voters. However, beneath this veneer lies a harsh reality for many Americans grappling with affordability challenges. For these individuals, meeting basic needs such as food, shelter, and healthcare continues to be a daily struggle, casting a shadow over the promising picture of economic prosperity. As the gap widens between the economic elite and the struggling underclass, doubts about the true state of economic success grow. Many foresee the possibility of another financial collapse similar to the fate experienced in 2007, even with political assurances. Despite political assurances, the truth is that the U.S. economy is facing one of its most challenging periods in recent history. A tangible sense of concern is emerging in America's collective consciousness. Many are beginning to anticipate the looming specter of a total economic collapse. If this were to occur, it would signal the end of what was once the bustling American Main Street. Thank you for watching WealthStream 101. Don't forget to subscribe to the channel and leave us a like below this video.